What is up, Steve here. I hope you are doing well. Before I get into the story about George Gammon, I want to touch on personal experience. So I am a local real estate broker here in Southwest Florida, and I've been through the last real estate recession. We actually opened up our real estate company probably in the worst time in 2006. And I remember transitioning through this period and prices just plummeted, and I really didn't anticipate prices to go down as far as they went. But I remember specifically calling investors that I was working with at the time, and we were listing a bunch of short sales. We were also listing foreclosed properties. And if you're a real estate agent, I have links in the description below for you guys pertaining to that kind of stuff. Now, we are listing these properties, and I remember a specific conversation with this guy named Kurt, really good guy, and called him up and I said, hey man, there's a package of 5 homes, single family homes in the Cape Coral area. It was Northwest Cape Coral. And I can get these properties each for 50 grand each for you. You got to buy the package. So we locked them in, $250,000, locked them into the package. And he calls me up like a week later and he's like, Steve, I'm freaking out, man. I'm concerned about where the market's headed and what's going to happen with the economy. So I'm going to back out of the deal. And I'm like, Kurt, the cost to replace this asset in today's dollar, in today's new construction environment, which new construction completely died, so you really had labor cheaper, you had materials cheaper. And I was like, the cost to replace that house with impact fees, with the lot, with the construction and everything else would probably be around $180,000, maybe $170,000, $160,000 based on, you know, the upgrades of the homes, because they were like-kind properties, but they were a little bit different. And he's like, yeah, I hear you, man, but I just want to back out. So he backed out. We ended up selling the properties to another investor. And I was just looking at it. I'm like, you know, these properties, the 50 grand a pop in these houses were almost brand new, barely lived in. And it just kept replaying in my mind that, you know, the cost to replace this asset is X dollars. So I've heard George Gammon. If you guys don't know this guy, he has 2 channels, George Gammon, awesome whiteboard videos, and he also has Rebel Capitalist. I'm pissed that I missed the Rebel Capitalist event in Miami a couple weeks ago, but the next one that comes around, I'll be sure to go and bring you guys through that as well. If you guys do want to see me bring you guys to that event, maybe meet some of these guys too, comment below. Let me know if you guys are interested in me filming some of that too. Anyway, great guy. He's smart. So anyway, he puts out multiple videos, and the same trend. He always talks about probabilities, no certainties, probabilities. And he goes, look, when I buy anything, my goal is to not figure out the bottom, and my goal is not to figure out the top, because it's near impossible to do so. He goes, I just look at it in fundamentally of, am I buying this asset cheap? And if I am buying it cheap, I'm going to go ahead and do that. And then when that asset gets expensive, I'm going to sell it. So obviously he uses data to figure out whether an asset is cheap or expensive. And the last video I watched, if I can figure out what video it was, I'll make sure I link it for you guys too. And he basically said that he was selling all of his real estate in 2018. And I was selling some of my real estate back then as well in 2018, because at that time I thought the market was high. And I even got a little nervous on a couple of properties that I had debt on. And I was like, I'm going to load these things because I don't know the certainty of the market. And this is right around the time when the Fed, they were increasing the Fed rate, and then all of a sudden they started dropping it, I think in early 2019. So there was some turmoil in the markets. And then obviously the pandemic hit, and then everything got artificially manipulated by the Fed and the government. So, but my point is I bought assets what I thought were relatively cheap. And then around 2018, I sold. And then I had other assets through the pandemic that, I sold as well, including this place where I'm just like, I bought it cheap and I'm selling it where I think it's expensive. Now, could real estate explode in the future? Possibly. I don't think so. I think we're going to see real estate go down, which is why I liquidated a lot of, actually all of my real estate. I did another video on that as well. And I'm going to be in a position to buy real estate cheap again, as well as other assets and potentially businesses that might be going out of business, where we might be able to get them for little to no money and really help people out and give them incentive to do business with us by us taking over their businesses. There's other opportunities, obviously, in the stock market, maybe even crypto market. Not too sure there. I really don't mess with any kind of crypto. I thought it was more of a kind of a Ponzi scheme because, you know, it's not necessarily recognized as a currency within the United States at this point in time. Anyway, I think that moving forward right now, and if you guys are in the market of buying real estate, if it's a home that you're going to live in or whatever, that's different. But if you guys are investing in real estate and you're looking at the cash flow numbers and everything else, I would say just be careful, pay close attention to the cash flow, make sure that the numbers do make sense, and give yourself a buffer too, because I believe that we're going to see rent rates decrease. Not in all areas, but I believe we will see rent rates decrease for multiple reasons, which I'll do another video on. And I think it's important to kind of have a buffer to hedge yourself a little bit there when you guys are running numbers. Maybe take 80% of the gross income that you would normally utilize 100% and utilize figures in that manner, because you know, I think that more inventory is going to come to market for rentals. And the market may get saturated there as well. And there's been a ton of apartment complexes being built. There's also like over 6 million people not paying rents right now. And when those people get evicted, that inventory will come to market too, maybe flooding the market as well. So I think that there's multiple factors to take in consideration. But the main point I want to make here is, you know, I would say follow George Gammon's advice in that sense. You know, nobody wants to overpay for anything. And unfortunately, we've seen an emotional rush to the real estate market just driving things up. And I think it's important to, especially if you're a real estate investor, to buy right, buy cheap, sell when things are expensive, and or buy on good terms. You know, if you're getting some kind of seller financing terms, or, you know, make sure that the terms work out in your favor, especially if it's an asset that you guys are going to be keeping for the long term. Anyway, I appreciate you guys being here with me today, and I'll see you guys on the next video. See you.